This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Kenneth Goodwin, General Managing Partner and Founder at Jeanensis Ventures. Jeanensis is an award-winning capital markets advisory and digital asset management firm. They focus primarily on advising multinationals and mid-market firms. Kenneth, thank you for joining us.
Well, Paul, thanks for having me here. I appreciate it. It's a wonderful time, and it's hot in New York City. And you mentioned that it was hot in Texas. So I like to challenge you to say which city is hotter.
Well, we're in Austin, Texas, and there's always hot technology going on here for sure. And it seems like it is in every city in the state, to be politically correct. Lots going on around the state for sure. But glad to have you with us today. And I'd like to kick off with what was your background? What did you do before you started investing in early stage companies?
Sure. My background, I started off my career at the lovely Federal Reserve Bank of New York, one of our powerful Fed banks. I was there for about 10 years on Wall Street, 33 Maiden Lane. Throughout that period of time, I became the first Mike Mansfield Fellow. And Mike Mansfield is the former ambassador to Japan. There's only one that's been designated this way from the Fed. So I spent a lot of time at the Bank of Japan doing research of the Tokyo Stock Exchange, Japan FSA, also the Japanese diet. And at the Tokyo Stock Exchange, I was actually the first and only foreigner to trade Japanese government bonds on the trading floor. And I didn't realize that at that time. So that was kind of a treat. But my ultimate role there was high-level projects. At that time, they were going through the post-reform system. So I was responsible for that $1.3 trillion implementation of that system. And then I came back to New York and I came back to the Fed. And guess what happened, Hall? That's when the collapse happened in 2007, 2008. And I got tapped by our president at that time, Tim Geithner, and I was very fortunate to work on the TALF program, the Term Asset-Backed Liquidity Facility Program. And that kind of set me up in dealing with primary dealers, major banks, financial institutions, hedge funds, all these major firms. And after that completion of that successful program, I got an opportunity to choose wherever I wanted to go to because people knew who I was. And I decided to go to PwC. And then after PwC, I got brought out by RBS, and RBS was great, the Royal Bank of Scotland, even though it was a sinking ship. But I was able to jump on HSBC, and then from that, went on to Grant Thornton and created Jeanensis from that period on time.
Well, that's great. So what excites you right now?
Many things, actually. One of the things that really is sticking out to me the most is digital assets. I like the idea of having firms that are in the blockchain application fintech space that are using this kind of digital transformation. And I call it digital transformation, Hall. These are firms who are using artificial intelligence, big data, using blockchain technology. So they're targeting to solve issues and challenges in our society. So there's that social impact side to this. And these firms are very innovative. So I like the idea of really working and investing in digital assets and advising the founders and the CEOs and giving and deploy the capital. That's more fun to me now. And because I do enjoy speaking to the founders, I do enjoy working with VCs, venture capitalists, and finding that nice balance between where to invest at, because I think that's really key. We talk about scaling, and each scalability for each firm is different because they have a different life cycle. So for example, if you're in healthcare is slightly different than fintech, which is different than reg tech, which is different than artificial intelligence. So finding that nice balance is the key. And that's what really keeps me going. It's the financial energy, which is really your intellectual property. And that energy, that vibration is what really drives me on in this day and age.
Great. Well, you work in the blockchain space and you see a lot of investors and a lot of startups in this space. What's your advice for people investing in the blockchain sector? What do you tell them to do before they write that first check?
That's a great question, Hall. This is my experience in this space. Joel, remember the period of time of initial coin offering, the ICO period where there was, yeah.
I remember the ICOs. It was a wild and crazy time.
It was the party of 1999 when you think of Prince, right? So everyone's exciting, jumping up and down, and you have the white paper, and that white paper was the way that they value where that token would be at. Now, the lesson I learned with that, you go back to the fundamentals. The fundamentals are who's your board, right? Who do you have as your board of directors, and who do you have as your senior management, and how do they actually have a strategy? How do they have a mission and a vision? And how do they have a purpose? What problems are they solving? So to answer your question, I would say start off that way. Start off with understanding the fundamentals, which is the board of directors, the senior management, and then go into actually whether these firms are actually generating revenues and organically. And do they have the actual applications, or do they have the technology to address the proper challenges, and are they solving that? So that's really the key. Those are the key areas I would recommend for folks. Get back to the fundamentals and then start to get into the numbers. The numbers are really tricky in the blockchain space because a lot of people get caught up all with the tokens. We tend to focus on at Jeanensis. We focus on the enterprise value of the firm. So we're concentrating mainly on whether or not that firm has a business plan in place. Do they have a product? Do they segment the market correctly? Are they actually creating the right type of customer services? So we get back to that organic revenue generating model. And that goes tie right nicely into how management are managing their cash flows. Are they making the right decisions in terms of investments, operations, and finance?
And great. And then on the other side of that table, what's your advice for people running blockchain startups? What do you tell them to do before they go out to raise that first round of funding?
I tell them all the time. I say, think about what problems are you solving first. Think about where you're solving your problems, and think about how your strategy is working. That's really important in the blockchain space because this is a technology that's constantly moving. And so what you have is these pivots, these constant pivots. But you got to find a way to say, this is our mission, this is our vision, this is our purpose, this is where we want to be in 2 to 3 to 4 to 5 years. Very important in this space, because what happens within this technology is that you can pivot away from an opportunity where you have organic growth. So I think really staying focused to your mission is very important. In terms of revenues, blockchain, in terms of these companies, it's sky's the limit. I mean, you can go anywhere from ARRs from anywhere from 10% to 20% to 50%. I mean, so those numbers are really astronomical. I like to see that slow crawling, where they're still part of that business life cycle, and is that area of maturity. So those are the things I would say to those businesses.
Great. So let's talk about the state of investing in blockchain startups. How do you see the industry evolving from here?
It's constantly, and I don't mean to be short on that, Hall. Here's what I mean by that. Because the industry is based off data, and data is the key in this industry. And so data allows for this, what they call platformatization, to occur. The ability to build dApps and apps and so forth. And that leads to these new products. And the products that you're seeing in this space now are products that include decentralized finance, right? DeFi, non-fungible tokens, and so forth. So this space will always evolve. So I see the evolution of the space, which is very critical. Now, the question is, are you able to recruit that revenue that you want when you create that product? And are you able to provide the service? The customer service experience is very important. And then there's other issues that goes on with the space, taxes and regulations and everything else. That's been the challenge in these days.
Well, great. And so what do you think is the biggest change we'll see in the next 12 months?
Wow. Definitely what happened recently with this bill, the infrastructure bill, the idea, the notion of the whole net that goes to non-custodial, which basically what that bill did was it actually, there's an argument whether or not non-custodial should be a part of the reporting process. And if they are part of the reporting process, are they going to get taxes? So it's really a tax treatment bill. But here's the biggest challenge in this space, Paul, and I've always said this in many of my talks publicly as well as privately, is that, and for the regulatory standpoint and being a former regulator, the first key to do is to classify. You have to be able to classify what is a blockchain. And it's because it's a technology, the challenge with classifying as a technology, you're dealing with data and you deal with intellectual property. So the closest you can come to is the core definition of blockchain, which is really what I say is a digitized payment system. So if it's a digitized payment system, then maybe kind of the character of that is that it's geared towards a currency, which is why you have Bitcoin and Ethereum classified as cryptocurrency. And if it's classified as cryptocurrency, then it's hard to tax. But however, our tax laws here in the US, we treat it as a property. So we tax it as a property. And I always say that that's the biggest challenge is the classification, because that leads to the treatment. How do you treat these particular assets? This is a new technology. So how do you treat these assets? Some of these assets, they act as if they're commodities. They act as if they're securities. They act as if there's currency, there's utility function to it. So how do you have a treatment towards that? But the first step is you got to classify it. And I think that is the key right there, because what's going to happen is if we don't get this right, Carl, not only are we going to lose the innovativeness of this, the key is we're going to lose the economic development. That's the impact. Innovation leads to economic development, which creates jobs, which creates financial energy, which builds the wealth that we have in the household. So we don't get that right, that's going to be a missed opportunity. So I think the next 12 months is very critical in the blockchain space.
Great. So let's talk about your fund and your investment thesis. What exactly is your investment thesis for this sector?
Yes, it's called the 144 Trailblazer Fund. And the fund it's a unique fund. It is a security token offering. So there's only 3 firms out there that have this similar type of approach, where necessarily they're not investing directly in digital currencies, but we're using a security token offering, which we're going through the SEC, registering through the SEC. And this was the SEC way of handling initial coin offering. They basically say, hey, you got to deem it that it is a security, which we're happy to do. And yet we have to do the proper filings for it. So initially we were going to do a Reg D. And so initially we're going to do the Reg D because we like the idea of the private placement, because that gives us the idea of targeting certain investors that had the history of doing digital assets. So these are names that you probably heard in the industry. I won't say their names, but they're very active in holding tokens. And then on the private, that was on the private side. The public side is the actual launch of the token itself. So ultimately, the goal and the thesis of the 144 Trailblazer Fund is to target firms in that seed to kind of Series A level. There's kind of a middle there where these firms, they're between 1 million and about 5 million in revenue. And they're at a point where they're about to scale and they're trying to figure out their scale, but they need that liquidity. And they don't need a lot of liquidity, but they need enough liquidity to either do market segmentation, product development, bring on new types of business development, new types of clients, and so forth. So we want to be able to, with the token, at least with the founders, they're going to have access to that token via the wallet, as well as receive that capital injection from those investors. So they're going to be able to constantly be able to use that. They can use that token for decentralized finance. They can actually, they can do a liquidity pool lending, and all these things that they can use to help them grow out their business. So that's really basically the thesis behind that. Now, we actually have firms, and we're targeting particularly firms in fintech, red tech, AI, blockchain, agritech. These are the types of industries that we're focusing on because we believe that they're using this kind of transformative technology to solve problems in our society. So there is a social impact, but then at the same time, there's also the ability to get these results on a consistent basis.
Great. Can you mention 1 or 2 startups that fit that thesis?
Yes. We've been very fortunate because actually out of the 24 firms that we've been working with already, a good 50% are BIPOC, 60% are women. So we've been fortunate to work with firms like AxiChain, and AxiChain is based down in Australia. It is a company that essentially what they've done is they've digitized the idea of cattle. So they recognize that cattle is a paper-based industry. And anywhere around the world, Hall, you notice that you see these little stickers on the cattle. And even with those stickers, and you take that cattle, you go on and you put that cattle on the actual car or a truck, it still has to deal with legal documentation and paper, all the way to the slaughterhouse, all the way to the actual grocery store. So they recognize that one of the things they can do is that they can digitize that or automate that through QR codes. So they're going to QR code the actual cattle itself, and they're going to use logistics intelligence, which allows for both the investors and the buyers and the sellers to see this cattle move. And so as you go along the supply chain process, there's opportunities where they can provide and collect data and use that as a way to shorten the time period to actually get this cattle out to the marketplace. But then at the same time, it gives enough information to the investors, to the farmers, and so forth. So now we have a better product at the tail end. And that's been a great firm to work with. Another firm that we work with is called AFID. AFID is based out in Los Angeles. And AFID is an artificial intelligence chatbot. So basically, the chatbot allows for it's a personal assistance tool that essentially allows you to do different types of assignments. So now you don't really have to worry about, typically what we normally do with our calendars and everything else. We can rely on this chatbot that actually gather all that information and is able to shape how your day is going to be like and so forth. So that firm is using a blockchain called Solana as a way to actually capture that data and report the data. And that's been very exciting. They've been very great to work with.
Great. So what are the challenges that a blockchain startup faces today in order to get their business up and running?
A lot of it is based on in terms of education. So I'll give you an example. There's opportunities where, well, one, it's fairly new. It's only been around for about 11 to 12 years. So the perception is that it's still new, but the perception is that people don't know what it is. And so that's an opportunity. That's an opportunity for education. It's an opportunity for training. But what happens is people tend to tie in blockchain with crypto. And that's the cryptocurrency portion of it, where let's say a firm like AFID, it's a blockchain application firm. So they're actually having a blockchain application to solve a problem. And that's slightly different. They may be using a token as a way to give back for their investors, but the core value of what they do is applications. And so I think that's one of the biggest challenges that they have. Now, from the capital raising side, as you and I know, one of the biggest challenges as an investor is trying to figure out how do you value these firms? What's the valuation for a blockchain application or blockchain technology firm? It's not the traditional sense. So we traditionally like to use that discounted cash flow model. That doesn't work in the blockchain space. So if a firm relies a lot on crypto is very volatile. So it's always going to fluctuate. So you can't really use that as a way to measure the valuation of a firm. There's got to be other new matrix that needs to be applied to measure or at least allows for tools as ways to calculate the valuation. Those seems to be the problems or the challenges within the blockchain space.
Great. And then on the other side of that table, what's the challenge a blockchain investor faces today?
In terms of the longevity, I'm going to say twofold. And I say longevity, meaning in terms of whether or not, at least in the traditional sense, you got an idea of how long a firm is going to last. So you can kind of sense where a firm is going to, be upon in terms of 2 to 3 or 4 or 5 years. And the blockchain space is a little bit different because the business life cycle changes frequently. Definitely if it's tied to, let's say, their token. Now, the other area is regulatory. That's a big challenge because now you have this regulatory oversight that's fairly new. It's not as concise as it could be and should be here in the United States relative to other parts around the world. But that's a headache because what that brings on an added additional risk that we need, as investors, need to look at. And we traditionally have done that in the bond market. So when you look at the bond ratings, they're going to look at sovereign risk. And sovereign risk is political, economical, financial risk. The blockchain space, the risk is regulatory risk and legal risk. And we see that frequently, and cybersecurity risk, which is what I should be adding, because that deals with data. So there's some areas that we have to really adjust because this is a technology.
Well, that's great. So you see a lot of different subsectors and applications within the blockchain space. If you had to pick one or two of those areas you think are good, immediate opportunities to pursue, what would you put at the top of the list today?
Yes, edutech, definitely number one. I think about in terms of how COVID-19 has spurred on digital transformation, but the idea that we are working at home and we are actually using computer more, and kids are staying at home for schools and so forth. The key there is the actual record keeping component to that. So edutech is definitely one of the areas. Food sustainability, agritech. Agritech is very important. We know that now that we're having some challenges with our supply chain, at least in terms of the food industry. So the ability to actually find a way to track and trace the actual supply chain for food, but also in terms of the ingredients, what's going into the food, that's very important. Supply chain, both on the manufacturing side, which is really key in terms of the products that we're producing. Health tech, I think, is very important. Health tech is extremely important in terms of the actual, not just the record keeping of healthcare records, but also the ability to use those records. Here in the US, you may have some problems with privacy laws here in the United States, but the ability to key in those health records to the actual customer itself. And that loans the opportunity for, let's say, a non-fungible token, a decentralized finance that could occur where that individual, because they own their intellectual property, have the opportunity to make additional wealth. So those are really the three key. There's a couple other areas I would target, but those are the areas I would actually look at to say that there's some great opportunities.
Great. And so, well, in the last few minutes that we have here, what else should we cover that we haven't?
Mainly on decentralized finance and non-fungible tokens.
Let's talk more about that.
It falls nicely into what we just mentioned in terms of the industries and non-fungible tokens to build. And it's not new. Here's the thing that most people think. A lot of people think NFTs are really new. It's been around for a long time. And the reason why I say it's been around for a long time, because the original idea that was established was how do you actually digitize, you digitize assets. And in digitizing those assets that were being targeted were assets that were geared towards music, but also assets that were geared towards, let's say, buying paintings. So BankX, I'm going to share the name. BankX actually had a platform. And that platform was geared towards taking those paintings and finding a way where people could own a piece of that painting. Now, the key with non-fungible tokens is that, yes, it does tie directly to the actual art itself and the original IP. The question is, do you as an investor own that IP? That's the big question. Or do you own the right to say that you own the IP? So, and that's the challenge behind that. So there's, because of what's happening with the NCAA, which is great for athletes, a lot of athletes are saying, hey, we are intellectual property, which makes sense. We have a namesake, we have a brand, we have a value. And that's where it's leading on to this non-fungible token that most people are trying to do. Now, DeFi is unique. I always say DeFi is your digitized treasury function. So if you take the treasury function of any bank or financial institution, you have to deal with asset management and liabilities and liquidity. And if you look at DeFi products, guess what it's dealing with? The same thing, but on a digital level. So if you're able to take that non-fungible token, and now you have the ability, the interoperability to actually take that and go across chains and multi-chains, you can trade it across different marketplaces. Now, the challenge with doing that is that the question that the SEC has, Paul, is this a market-making feature? right? So that's a challenge, right? Is it a market making feature? Are you using your intellectual property to market make? And if you're market making, you're not doing suitability. So there's no disclaimers or disclosures or anything like that. Because typically we as investors, we know before we go out and launch any product, we have to kind of get a smell test of the investors, of our consumers and everything else, our target audience. So there has to be a level of suitability. So there's a challenge behind disclaimers and disclosures, the proper process to ensure that risks are mitigated. And that is the key, I think, that's happening here. So those are areas that keep me up at night, other than the founders.
Well, those are certainly hot areas, and certainly the world's looking at how those shape out. That's the next generation of blockchain applications, and appreciate your sharing with us how those work and what to look for there. So how best for listeners to get back in touch with you?
I spend more time on LinkedIn. My LinkedIn address is the way to reach me, because I spend a lot more time in LinkedIn. I don't tweet as much. I'm not a big tweeter. I stay away from that. I don't really have time. And I always joke with my VC colleagues that I spend more time looking at term sheets and deal flow. So I really don't have time to tweet.
I understand. It takes time.
It takes time to tweet. I'd rather spend that time with the founders, with the investors, and give them value. Time is valuable, and give them that financial energy, and hopefully we can build wealth across the board.
Well, that's good advice. So in the last few minutes that we have here, want to just thank you for taking time to share that with us. We'll put that information into the show notes, and we hope to have you back for a follow-up soon.
Well, thank you very much for having me. I look forward to being back.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.